Hello everyone and welcome back to Arilla Land. In this video, I'm going to explain what is technical analysis, how technical analysis works, what are indicators, patterns, and candlestick charts. Also, I'm going to show you some useful patterns to use on your tradings. So continue watching if you are interested in trading. Technical analysis is a method of analyzing financial markets by looking at past price and volume data. The idea behind technical analysis is that market trends, patterns, and behaviors repeat themselves over time. And by studying these patterns, traders can identify potential buying and selling opportunities. Technical analysis is based on the belief that all the information you need to make a trading decision is contained in the price and volume data. Unlike fundamental analysis, which looks at a company's financial health, earning, and management, technical analysis is purely focused on the price movement and trading activity of the asset. There are several tools and techniques used in technical analysis, including charts, indicators, and patterns. One of the most common tools is candlestick charts, which shows the price movement of an asset over time. By analyzing the chart, traders can identify trends, support, and resistance levels and other key patterns. Indicators are also widely used in technical analysis. These are mathematical calculations that are applied to the price and volume data to provide additional insights into market trends and momentum. Some popular indicators include moving average, relative strength index or RSI, and Bollinger Bands. Patterns are another important aspect of technical analysis. These are specific shapes or formations that appear in the chart and can indicate potential trading opportunities. Some common patterns include head and shoulders, double tops and bottoms, and triangles. Thanks for tuning in, and I hope you learned something new. Don't forget to like and subscribe to my channel for more videos about trading, investing, and crypto.